Alright, let's build a minimalist trading strategy using nothing but free indicators. I call this a strategy that just works because it keeps my charts clean and my decision making simple. Now before we touch a single indicator, let's be crystal clear. This is not a financial advice. I'm showing you my personal framework as an educational example. Okay, so I've got TradingView open here. I'm looking at Bitcoin and the 15-minute time frame. But honestly, the chart and the time frame doesn't matter as much as the logic we're about to cover. This way of thinking can apply to a lot of different markets. So let's focus on the how and the why the indicators we're using, how set them up, and the thought process behind the trade. First up, we need to add our main indicator. Go to the indicators at the top. In the search bar, type in Demo Adjusted Average True Range. You'll probably see that back quant next to it. That's the one. Just click it and it'll pop onto your chart. So what is this thing? Basically, it combines two ideas. One part, the ATR, helps measure how volatile the market is, like how much the price is bouncing around. The other part, the demo, is a fast-moving average that helps spot the trend. Putting them together gives us a real clean visual for when momentum might be shifting. Now, before we use it, we have to tweak the settings. This is super important. Open up the settings for the indicator. You're gonna change the demo period to 27. And then change the regular period to 27 as well. I find 27 gives a pretty good balance. Next, we gotta click Paint Candles. This is awesome because it colors your price candles for you, making it way easier to see what's happening at a glance. Then, check the box for Show ATR Moving Average. Change its type to SMA. And then set the period to 200. Once you do that, you'll see this big, solid line on your chart. That's our 200 SMA, and we'll use it as our long-term trend guide. And then you have these red and green lines, which we'll just call the demo line. That's what helps us spot shorter-term moves. Now, to help confirm our idea, we need one more tool. Go back to the indicators and search for volume accumulation percentage. Then click to add it. This is an oscillator, which just means it moves up and gives us clues about momentum. For this one, just open its settings. and change the time period to 27. That's for the setup. Alright, first things first, and this is probably the most important step for you. What's the overall trend? The way I look at it is simple. If the price candles are generally trading above that big 200 SMA line, I'm thinking we're in an uptrend. And if the price is below it, I'm thinking we're in a downtrend. This is the first filter. It tells me which direction I should even be paying attention to. So let's walk through a potential buy setup. My first rule is price has to be above the 200 SMA, and if it's not, I'm not even looking for a buy. Next, I'm watching for the demo line to flip from red to green. That's my first clue that short-term momentum might be shifting upwards. But this is a big but. I do not just jump in there. I need some confirmation, so look down at our volume indicator. If that's also showing a green area, that's when it gets interesting to me. It's like a few different puzzle pieces are all pointing in the same direction. If these conditions line up, that's where I might consider a buy trade. For a stop loss, one way to think about it is placing it at the demo line or maybe just below the last swing low. That helps define my risk. For profit target, a common approach is to aim for 1.5 times whatever you're risking. This is just a framework to help ensure the potential rewards worth the risk you're taking. And for sell trades, you probably guessed it, but just flip everything upside down. If the price is below the 200 SMA, we're in a downtrend, and I'm only looking for sells. I'd wait for the demo line to turn from green to red, then I'd look for the confirmation from the volume indicator, a red area, suggesting bearish momentum is strong. And if it all lines up, that's when a sell trade might be considered. The stop loss could be placed at the demo line or just above the recent swing high, and the target could again be approached with that same 1.5 times risk concept. And that's the basic framework for how I use these tools to spot potential setups. Remember, this is just one way to look at the market. A huge part of this is risk management, which we don't even get deep into today. It's so important, I made a whole separate video on it, which should be popping up on the screen right now. Seriously, go check that one out next. Happy trading!